Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec, on Monday the 9th of September. We have a fairly positive outlook to markets at the moment. Still, we've seen this risk recovery that began last week sort of drifting into this week. Not hugely positive, but still we're seeing recovery in sterling. And that recovery in sterling has come on the prospect of less chance of a chaotic exit from the European Union, but also this morning we've seen a good batch of data actually for the UK economy. Monthly GDP came in better than expected. We also saw marginally better than expected industrial production, and also the trade deficit was slightly better than expected either as well. So it's helped sterling to continue this rebound that it's had in the past week. Interestingly enough, look at this. Although you've got other markets higher, FTSE 100 again, you've got that negative correlation play between FTSE and sterling. Sterling higher, FTSE struggles in a recovering outlook of markets. So that's interesting. But just broadly speaking, we're seeing euro slightly higher, dollar yen slightly higher, and Aussie and Kiwi slightly higher. We saw on Friday the reserve requirement ratio cut by 50 basis points from the People's Bank of China. That's sort of as a monetary policy response to the slowdown aligned with the trade dispute. And the trade dispute was pretty much laid bare fairly much on the trade data over the weekend from China, where exports fell more than expected. And it's interesting that generally speaking, monetary policy continues down the ease path, and I think the Eurozone and the European Central Bank this week will just continue that trend. So generally speaking, we've seen the dollar slipping back a slight amount today. Treasury yields fairly holding, a little bit higher on the improved risk appetite. It's interesting that we've seen the 2-cent spread still in positive territory, so that again is a positive. But VIX volatility down at 5-6 weeks low, which again sort of paints a picture of better risk appetite, and that is certainly helping the equity markets continue to maintain their recovery momentum. Oil price higher. Now I'll show you a chart on the oil price. We're starting to break that consolidation that we've had in the past month, but this downtrend of the past 4 and a bit months also being tested, and both the WTI and Brent crude testing those downtrends. But is this the beginnings of a breaking recovery on that oil price is the question. Okay, so in terms of data points, well, we haven't really got any today, so we're looking out towards still a bit more of a look at how Brexit develops, and the Parliament is expected to rubber stamp. The Parliament has rubber stamped, and the bill to prevent a no-deal Brexit is going to be given royal assent today. So Boris Johnson is also set to ask for a general election. Whether he gets granted that wish by the opposition parties, there need to be 2/3 of opposition MPs to give him that general election. Hasn't yet been seen, and just generally speaking, markets are a little bit more on the positive side today. So my chart today is Aussie yen, and that really reflects this improvement in risk appetite. We've seen Aussie yen improving on a consistent basis over the past week, breaking out through 72.90. That is really the first time we've seen a decisive improvement since this breakout in April that failed. But since then, we haven't really seen any real improvement on Aussie yen on a sustainable basis. Well, now we've seen this breakout through 72.90. That completes a base pattern, gives you an implied target of around about 75 on that Aussie yen, and certainly the 73.93 reaction low from June, which is the next resistance, that's coming under test now. But look at these momentum indicators on the brink. RSI 59.60 area, that was around where it failed in July. Is this going to now move into the 60s and produce strong momentum? You've got the stochastics and the MACD lines rising quite strongly now. So it certainly is looking like a positive move on Aussie yen. So we're still looking for continued recovery in this Aussie yen. Buying into weakness, 72.90 is initially the breakout support. So that's the neckline of that base. You've got 72.40 on the hourly chart as well. Nice band of support in there. And the outlook remains pretty decent for further recovery. So with that in mind, we're going to be looking for further gains, I think, in the Aussie yen, and looking to test certainly that initial June resistance and then further in due course. Okay, so I wish you good luck in your trading. Click here to subscribe to our analysis videos, and go to our website where you can sign up for our webinars. Thank you very much.